afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from high above the trading floor on this Friday, November 21st. Happy Friday. Feels like everyone around here is ready for the weekend, and honestly, same. That Friday energy is showing up in markets, at least a little bit. Stocks are trying to shake off yesterday's slump. We had that head-spinning reversal on Thursday. Wall Street initially cheered NVIDIA's blowout earnings, but those green arrows didn't last long. Investors quickly shifted gears and started worrying again about whether the Federal Reserve might hold off on a rate cut next month. But today, a little fresh optimism. New York Fed President John Williams hinted the central bank could still cut rates in December, and that's giving the market something to smile about as we head into the weekend. The Dow and S&P 500 are both modestly higher, but if yesterday taught us anything, it's that we shouldn't call it too early. Even if the major averages hang on to these small gains, they're still on track for a losing week. And that optimism isn't totally spreading into big tech either. The Nasdaq has been bouncing back and forth across the flat line. So there's clearly still some concern about stretched valuations and the AI rally running out of steam. NVIDIA is adding to yesterday's weakness. It's now down more than 5% this week, more than 10% this month. And take a look at Oracle. It's the worst performer in the S&P 500 today. It's down more than 10% this week. Wedbush's Dan Ives calls this pullback the gut check phase of the AI revolution, but he insists we're still in the early innings and remains strongly bullish heading into 2026 and beyond. Both NVIDIA and Oracle are on his list of favorite tech stocks. And not all of tech is struggling. Alphabet continues to power higher. It's up again today and about 8% higher on the week. Right now, it's the only Mag 7 name solidly in the green for the week. Crypto, though, is having an even tougher week. Bitcoin is now trading around $83,000, down more than 10% on the week. Ethereum and Solana are down even more. That weakness is also hitting Bitcoin-exposed stocks. Bitcoin treasuries, like Strategy, are down about 15% this week. Galaxy Digital is off a similar amount. And crypto-related miners like Riot Platforms are getting hit hard as well. Outside of crypto and tech, we're continuing to keep an eye on the consumer, and there's a lot to unpack there. Fresh data on consumer sentiment came in right on target for November, matching estimates. The University of Michigan says sentiment did tick up a bit after the shutdown ended, but consumers are still pretty fed up with high prices and with paychecks that just aren't going as far as they used to. And you can really see that in how people are spending right now. Shoppers are being pickier, but Gap and Ross stores are clearly coming out ahead. Gap turned in a surprisingly strong quarter. Earnings and revenue topped expectations, and same-store sales jumped 5%, helped in a big way by that viral Better in Denim campaign with Cat's Eye. And get this, outside of the pandemic era, that's Gap's fastest growth since the 2017 holiday season. Gap CEO told CNBC they haven't had to lean on big discounts. They're attracting shoppers across all income levels, and the holiday season is already off to what he called a great start. Ross Stores also rolled out upbeat results and raised its fourth quarter outlook. And in some rare good news for retailers, Ross says tariff-related costs are now expected to be negligible. But overall, it's been a mixed bag for retail this week. Walmart is higher, Target is lower, Lowe's is up, Home Depot is down, TJX is in the green, and Bath & Body Works is deep in the red. Next week is a holiday-shortened week, but we'll still hear from a whole slate of names, including Kohl's, Dick's Sporting Goods, Best Buy, Five Below, Petco, Build-A-Bear, and Kroger. Meanwhile, Verizon is cutting more than 13,000 jobs with layoffs already underway. The Wall Street Journal first reported the news after getting a look at a company-wide memo. CEO Dan Schulman told employees the goal is to reorient the business around customer service. Verizon has already started notifying workers, and that process will continue over the next few weeks. The company is also putting $20 million towards a career transition fund to support employees who are leaving, offering things like reskilling programs, digital training, and job placement support as Verizon leans further into the AI era. In other news, if you're gearing up to travel soon, here's something to keep in mind. Air travelers without a real ID or a valid passport may soon have to pay an $18 fee just to get through airport screening. Federal transportation officials say the non-refundable charge would cover the cost of using alternative verification methods. The Real ID requirement for driver's licenses went into effect in May, but plenty of Americans still don't have one or a passport. And it's not yet clear whether this fee will kick in during next week's massive Thanksgiving travel rush. That's all for now. I'll be back here next week with your market check-ins. I'm Caroline Woods at the NYSE. Have a great weekend, everyone.